We got home builder confidence rising in September for the first time in 4 months. The reading coming in line with expectations and comes amid the backdrop of falling mortgage rates. For more, we're bringing in Jim Tobin, CEO of the National Association of Home Builders. And Jim, I just want to start with that rise for the first time in 4 months. I see something like that, and I think about those falling interest rates that we've been talking about, or the expectation for falling interest rates and mortgage rates. Is that what's driving that little bit of pickup in confidence that we're seeing?
Exactly, Josh. We're finally starting to see the light at the end of the tunnel with the anticipated news this week that we'll get some sort of rate cut, whether it's a quarter point or a half point, remains to be seen. But our members are starting to feel that optimism that we've seen peak interest rates, both in the mortgage space, but also with the Fed and therefore lending rates that our members use to buy land, develop land, and then put a home on it. So we're anticipating again some tailwinds here for the next several months.
And Jim, with the Fed, let's say they cut Jim, they do a normal 25. What kind of impact does that have on the 30-year fixed?
I think we're going to start to see the confidence coming back into the bond market, and therefore we're going to see that whether it's a direct correlation between the Fed funds rate and mortgage rates, they don't move in sync normally. But we anticipate that just the good news about the economy that the Fed has finally decided to ease, I think that sends a signal that we are in for that soft landing that we've been talking about for a couple of years now. But more importantly, the Fed rate does translate into almost a one-for-one cut in those construction loans that our members use in order to buy and improve land and start projects. So that's really what the Fed means for home building in the short term.
And Jim, you bring up an interesting point there, because I feel like there's been so much talked about the mortgage rates, right? But is it those borrowing rates that is sort of what is holding back the overall housing market? Is that going to be kind of the key cog here rather than maybe mortgage rates falling?
Well, I think mortgage rates in the short term, mortgage rates are going to start getting people who have been sitting in their 3 or 4% mortgages in their existing homes off the sidelines a little bit more. They're going to start taking a little harder look at jumping back into the market, which means more competition for those new homes, which have had a pretty outsized portion of the market over the last couple of years. That said, I think we're still going to have land constrictions, land use constrictions from local governments. Material prices are still high. So we're still going to have some headwinds with trying to put new homes into the marketplace. But for us, I just think anything that's good news is going to start spurring that economic growth that we need. And as you know, both presidential candidates have talked about housing and new home supply, more importantly. So I think this all feeds into that idea that we're not going to be talking about housing for the next couple of years.
Jim, you mentioned those presidential candidates. I'm curious, Kamala Harris's proposal, $25,000 tax credit, cover the down payment cost, Jim, of first-time home buyers. What did you make of that? Good idea?
I think anybody who's talking about housing and supply, it's a good idea. I certainly have some concerns with the cost of these programs. As much as they are well-intentioned, we don't need any more demand-side stimulus. We need more supply-side stimulus. So that's why the vice president's plan to offer home builders a tax break to start building in that first-time space, I think that's really important. Again, talking about new supply or getting local governments to ease off housing regulations and make more land available. That's a good piece. You had former President Trump also talking about spurring that low end of the market as well as opening new federal lands to construction. So I think there is something there. But again, demand side, interest rates will take care of demand for us. Demand has always been there. Interest rates have kept that pent up for a couple of years. So we expect that as rates continue to fall over the next year or year and a half, we think demand's going to come back. And that's the time we need all those supply side stimulus so that we can get home builders back building again and meeting that demand.
Jim, there's a lot of debate on how much rates are going to fall over the next year or 2 years at this point, right? How much do you feel like rates need to fall, or people need to feel like they're going to fall to start to bring that demand back?
We think rates settle into what we believe is the new normal sometime in 2026. And we think that new normal is about 5 to 5.5%. The days of 3 or 4% mortgages are gone, I'm afraid. So what we need to do is get this whole generation of buyers to recognize that 5.5% is still really cheap money historically when it comes to mortgage rates, and it's going to be a great time to buy your home. For those who bought earlier in the last couple of years, it's going to be an opportunity for them to refi. Of course, that bringing back that refi market for our mortgage banker friends is going to be important. But we are really looking for new originations and people who want to get out of their existing homes because of economic opportunity or just plain need to move to a different location. Those lower rates, again, probably over the next year and a half before they really get to the new lows. Even though we're touching close to 6 now, I still think we're going to see a lot of volatility over the course of the next year.